Mike Tedeschi, Portfolio Manager at Perspective Wealth Planning, with this week's market breakdown video. Now, we have had quite a rally off of that key important support level, the 4,100 on the S&P 500 here over the last week. But the market has run into the next area of resistance and has not made a higher high. So technically our downtrend is still intact, regardless of how great things have felt here over the last week. We're going to jump in and take an in-depth look at the indexes, the key levels that we need to pay attention to break that downtrend cycle. We're also going to come in and take a look at the US dollar, commodities, and we'll jump in and we'll take a look at the advanced decline line and our Nasdaq McClellan Summation Index in the breadth portion of our video. Now, we held that 4,100 level. We did not go and make another lower low, which was really good that we held this zone in here. And last week we had a very sharp rally off of that zone, and we rallied essentially straight up for 5-6 days in a row. Now the problem is, for the bulls right here, is that we have now run right into our major resistance zone, which is right here. All right. Now we get this zone from a couple of things. One, we ran into this area in the middle of last year and then failed. And then when we finally did break above it, it held as support. It held as support, right, until it finally broke. And then it acted as resistance here, right? And now here we are testing it once again. So you can see over the last 8 months, whoever wins this battle between that 4,500 and 4,600 level is the winner for the short term at least. If we can get back up over this 4,600, we would negate all of this being a potential lower high, because we would then have a chart that looks something like this. And that would give us an uptrend once again in the short term. And that's really what we're paying very close attention to. So if we can get up over that 4,600, we really have a pretty good shot of running back up towards those highs, because there isn't a lot of resistance between those two levels. Now, this is the zone that the bulls did not want to see the market start to falter, because all we did is rally right up into this resistance zone. And then yesterday we had a down day. Filming this Thursday before the market opens. We're slightly up about 0.5%, but we're basically going to open somewhere right in this zone. We really need to pay very close attention to 45, but the key is a close over 4,600, which is that area from the beginning, or I should say middle of January. And that's what we're really watching here to determine where our next move is going to come. Now, when we take a look at the Nasdaq, I'm going to clear all these lines off so we have a fresh chart. The Nasdaq was a clear leader to the downside. It hit 20% down from the start of the year to here. It held its important 13,000 level, which you've heard me talk about consistently as well. And now it has also not made a higher high. We are running into the overhead resistance that comes into play here. This 15,000 level we have not traded above since the end of January. And this is that resistance zone that the bulls really need to drive us back over. The Nasdaq undid essentially a year's worth of gains. In fact, all of last year's gains, which was about 30%, by last week was about only up 0.5% to 1% or so. It undid an entire year's worth of gains, but it held here. And if we back the chart up and look at the really importance of this level, the major zone from 13,000 to 12,000 is exactly where we had our breakout from in here. This is the area the bulls cannot lose. If this ends up once again rolling back over and you find yourself below this zone, we have lost that breakout, and a major long-term top could potentially be in play. Now, we've had a beautiful rally right here, and I'm not saying we're breaking below this at all. It's just those are the important levels to watch. And it is really, really key for the bulls to hold on to this support zone, because if they lose that, again, this looks like a major topping pattern at that point. Above 15,000 on a closing basis does open us for that run back up to the highs. The Russell, very interesting chart. 2100. We have talked about this extensively. We have essentially two boxes. We traded in this box for almost all of last year, broke out, but it was a failed breakout and then broke down. And we have stayed in this lower box between 1900 and 2100 ever since. Now we rallied back up, and where did we rally right back up to? 2100, and that is where the Russell failed yesterday. Right? So we keep running into these resistance zones after these big sell-offs, we haven't negated that downtrend yet. Until we really get back into this upper box and make a higher high, while we had such a strong rally over the last few days, it has not structurally changed the charts. The Dow, same thing, right? Strong rally, but here's your last high. We still have a high, a lower high, and if they turn back from here, we still have lower highs, and we still have lower lows. We're still in a downtrend until the Dow can get back up over that 35,600 zone right in here and put in a higher high. That is what we need to pay attention to. An uptrend is defined as higher highs and higher lows. A downtrend is defined as lower highs and lower lows. We still have lower highs and lower lows until we take those levels out. And so what happens here over the next few sessions is very, very important. If we start to see more weakness come in right here and the market starts to roll back over, that would be a very bad sign. But the bears can't claim that they've accomplished anything additional until we get underneath of those lows from the middle of February, i.e. that 4,100 level on the S&P 500. And that's why we're paying such close attention to these areas, because they matter so much on a technical basis. Now, the U.S. dollar is still trapped in between that $97 and that $99 range, right? We have talked about the importance of this zone, and we have basically stayed in there now for the last month. The break that happens from here is really important. If it can get back up over 100, that opens up 2020's highs back at that 103 zone. Right? If we fall underneath of there, we've got some support down to 97, and then we have support down to 95. This is still a messy market, but it is certainly trending up here over the last year, but it has a ton of resistance at this point in time. So can it actually continue to push forward? That's really what we're paying close attention to. Now, bonds here have finally started to break down, and I want to look at this on a couple of different time frames. Okay? Here we are on our daily time frame. You can see that we have now taken out these key lows from June of 2 years ago, the beginning of last year, and this year. So here's 3 years worth of data we've pulled back down. This does not look strong. However, when you put this in the context on a monthly time frame, and this is what we really want to pay very close attention to. This goes all the way back to 1997, guys. We have higher lows, and we still have higher highs. We are still in a prolonged uptrend, and that doesn't change until we get underneath that 135 zone, and that would be the lows from 2018. Because again, if you get here, now what you have is you have a series of lower lows, and you would have a series of lower highs. And you would take this long-term uptrend that was in play, and you would negate it. So we're really watching what goes on here, but you can see very clearly over the last year, potential inverse head and shoulders top in on bonds. We keep talking about raising rates, raising rates, raising rates. We know that bonds are inverse to rates. So if we continue to see more action out of the Fed, you would think logically that this would continue to head lower. There are other factors that apply as well, but we still technically still have our uptrend in play until we get below that 135 zone on a monthly time frame. Now let's come in and let's take a look at a couple of additional commodities here. Oil, trying to get back up over that 115 zone. I'm actually going to zoom in on an hourly chart. I usually don't zoom in this much, but I want you guys to see. Here's that big spike up right in here from the Ukraine news. Right, we fell back down. We tested that 95. We held. We've pushed back up, and we are right back into this zone. This 115 to 116 area is key on oil. If you get up above that, you actually do put that 124 to 130 kind of high level back in play. So we're really watching this one very closely here today to see if we can get up over that 117 zone. That would be very constructive for higher prices. Gold held that 1900, is trying to get back up over 1950, all right? The 1950 zone, and the reason why that's important goes all the way back to here. So we had that big spike up, potential multi-year double top, but we are holding the key breakout zones that we need to at the moment. Over 1950, I think we run back up towards those highs. Underneath 1900, we probably head back down towards that 1800 zone. We do still have, and we're talking about uptrends, still have higher lows here put in over the last year for gold. Even though we haven't accomplished much in the space, we still have those higher lows put in, and we do have what looks like a big long-term cup Here's that potential handle. You can look for that break. Right, that's the bull case. Silver, well, holding that 25 zone, needs to get over 27. Platinum, holding that 1,000, not as strong looking of a chart. Palladium gave back most of the spike from the Ukraine-Russia initial crisis concerns and is pulled right back down to the important breakout level at 2,400, and that is where it's held. It's making a little flag in here. This is a wild market. It's made some huge moves over the last year, being cut in half, then more than doubling, all in the span of a couple of months. The key on this chart really is that 23 to 2,400 level from a downside perspective, and we're going to run back into resistance up around that 2,800 level on the upside. The other one I really want to pay attention to here, guys, is copper. Copper looks like it wants to get over that 480. I'm going to back this chart up. We're going to, again, look at a long-term standpoint. That high from all the way back in 2011 was about that 465 zone. We are above that. As long as we stay above this zone, it's quite bullish. Now, we need to get over last year's high, right, which is that 488.8. All right, and we are pushing right into that zone. We don't need very much more here to breach that and be above it again. You're about 1.5% away from that. And being up there at those all-time highs would, of course, be a very bullish sign for the copper market. This chart does look really good, as you know, from a long-term standpoint. It's kind of got that cup, and then it's got a multi-year potential handle with the potential breakout here. Certainly would watch, especially over that psychological level of $5. Would pay very close attention. Now it's time to jump in and talk about our breadth readings. The advanced decline line on the Nasdaq has had a huge push up here over the last couple of sessions, which makes sense when you take a look at the fact that the Nasdaq's up, roughly 10% off of its bottom from that bounce over the last week. However, look where we're at now, okay? Because again, we can use this as an actual resistance zone. We can chart and draw lines on this type of chart. This area is resistance, right? We fell down to it, we bounced, and then we broke underneath, and now we're testing it from the underside. And this level also goes all the way back to the 2020 lows, and we barely undercut it back there in 2019. So really this minus 35,000 level is really, really important. Bulls want to get back up over this. We get back up over this, you can start looking at this as potentially a bottom, okay? It certainly feels that way when you're looking at a lot of individual securities up 20, 30, 40% here over the last couple of weeks. All those names, most of those were down 80, 90% over the last year. So the question, of course, becomes, is this a dead cat bounce, or does this have some life into it? And when we look at the advanced decline line and our breadth readings, we still don't have any clarity there. This feels much better, this bounce that we've had here, but all it's done is rally us up into a major level that we need to pay attention to. When we look at the Nasdaq McClellan Summation Index, we see a very similar setup. All right, we talked about this area here being those lows from 2019 and 2020. We really wanted to see a bounce come from there, and we have made that bounce. All right, we have done a nice job. We're still negative 700 here, but look again where we're failing. We're failing right into this previous zone of support, which is now acting as resistance. I need to see breadth get back up over this minus 600 level, and the reason why that's so important is that is also this zone that you can see for the last 3 years matters in a big way. This 6 to 400 level. You get up over that, times get much, much better. And of course, we really want to be in positive territory when you're taking a look at this. We have some signs and some life of potential bottoming action here, right? We have, this could be a higher low in play. We need to take this out. If we did and we were up here, we would then have higher highs and higher lows, which would be a great sign for this being a potential bottoming area. But again, where we're at right here at this moment is right into that key level. The theme from today's video is we are in that major resistance zone, that really key level on most everything we're taking a look at. Where we go here over the next week is going to be very, very, very important. As always, I hope you guys find this information useful. You can reach out to me at mtedeschi, Perspective Wealth Planning, or you can give me a call at 814-580-9881. I'd love to talk anything about the markets with you guys. We're going to pay very close attention to what happens here over the next week. I look forward to seeing you guys next week. Take care.